Saved at the bell. You're watching the Stock Market Brief Show. My name is Michael Silva. Did you know this? That there's been 6 trading days so far in August, and in the S&P 500, it's closed down 5 of those 6 trading days. Bullish, baby. Don't believe me? Take a look here at the S&P 500. Here's day 1 of August. That was down. Day 2 down. Day 3 was up, and then the rest were all down days, including today's little shooting star candle. How did the markets perform overall? The 11 sectors were rather flat for the most part. It was a lackluster day. Started up really good, all this FOMO running into it, and then all of a sudden it started selling off and then got a little quiet. We have that CPI data right around the corner. Consensus is estimating 8.7%. Tomorrow's the 9th, the day before the CPI report, which is the 10th. So I want to just remind everybody on the last CPI report going into around closing bell, that data was leaked and you started seeing the market sell off aggressively. So just be on the lookout. You know, tomorrow could get pretty volatile, especially if they let out the data a little bit ahead of time. So be aware of that. If they don't, then obviously the 10th, when the data comes out, you know, there's going to be some volatility. You're going to want to see how the market responds to it. As of now, the market saved at the bell. What do I mean by that? 5-day moving average was once again tested, but into closing bell bumped up and saved it. So the buy algos, they're hitting it. They're hitting it hard. They want to stay above that 5-day moving average, right? We closed at 412.99, basically 413 on the spot. But the more that we kind of just flutter around here, the flatter this is going to get. Very similar to how we saw this big run up and then the flatter it got. So then if that's the case, price is going to be consolidating just like it was over here in a bullish consolidation, right? We have a strong move up and we consolidated sideways. It's bullish consolidation, right? We had a strong move up. Boom. Now we have a somewhat of a bullish consolidation right now. We haven't really seen the move digest fully. So we'll see going forward. I guarantee you that we'll probably see this break at some point here this week, given that we have the big econ drop coming, okay? If you take a look at the Qs as it stands right now, nowhere really on the week. We didn't finish down very slightly, but you can see here, saved at the bell, 320.71, and the 5-day moving average is at 320.49. We'll call it 320.50, basically right there in the middle of the weekly risk range. When that data comes out, I wouldn't be shocked if we hit the bottom or the low end. If that's the case, is it to be expected? That is to be expected, right? It's the expected move that the options market priced in 68% of the time. It finishes within that weekly range, okay? So if we start breaking down, be on the lookout to either one, do a U-turn and break back up through that 5-day moving average. That would be pretty bullish. Or if it holds as resistance, that could be quite bearish as it potentially would start turning around at that point. We're going to go into a buy signal that I recently saw here momentarily. It's from a bottom fishing indicator. Before we do, let's take a look at the IWM. IWM, along with many other small caps, which we're not going to get into, they did continue to squeeze. The IWM shot up, right? Boom, boom, and then it started selling off intraday. So this wedge is somewhat broken, but we're kind of just seeing increased amount of volatility right here. So I just kept it on the screen as it stands, and we are well above that 5-day moving average there too as well. So we'll continue to monitor and see if this sets up potentially some sort of, bull flag, or just kind of consolidates in like a bullish rectangle and gives us some sort of entry or somewhat of an idea as to where the next move may continue. If you take a look at a couple other big name charts, this is why it's very important to be careful and not to FOMO, right? So we had a 1, 2, 3, 4, 5, 6, 7-day rally in NVIDIA, and just take a look how it was basically one single day brings you back to day 1 of that rally. And a lot of people say, declining volume when the market's moving up doesn't really matter. It does matter, right? You have declining volume on a move up, and then what you do is you wait to see, okay, if we get a break or consolidation and we see a big, huge volume bar come in, that's distribution, and that's not healthy. And where did the price come right into? Well, to be expected, the lower weekly expected move as it stands, and it's holding on the 50-day and 20-day. So this could very well just be a back test, and then this could be potentially area to accumulate where we can start heading back up, especially if you believe that the bottom is actually in the market. But, proceed with caution going into a CPI report, right? A big break on big volume. It's a little, as long as it's holding those moving averages right here and it's within that expected move, okay, cool. But, just be very, very careful here. couple other ones that I want to look at, these big cap stocks are quite important to watch and see how they're responding. As it stands right now, we had some dark cloud coverage. What's that? Well, it's basically where we had a gap. Okay, here's the candle the day prior. We gapped up and then we closed more than halfway into it, which is, a bearish candle. This is a bullish, bearish. That's dark cloud coverage. So we'll see if there's actually follow through that brings us to the lower expected weekly move, the lower weekly expected move, and see here if it will want to come and retest those moving averages down there beneath us too as well. Okay, so that's Microsoft. And then we have Google too, hasn't really gone anywhere since May. It's just been going sideways as it's kind of right around its weekly expected move, but it's up in this area of resistance. So this is more of a bearish type of consolidation because it's on a move to the downside underneath some key moving averages. But for the most part, if we start breaking above that, that could be quite bullish where we can go test that 200-day moving average. So, it's very binary as it stands right now. Good report, or if the market interprets it as good, market can go higher. But if the market interprets it as bad, market go lower. Unfortunately, that's just the case here, and we don't really have too much digestion to really determine what could potentially take place. But I will point out this buy signal that did trigger. It's not technically a buy signal, but it's a bottom finding indicator that I learned from I never can pronounce his last name, David Knapner. And basically what this is, it's looking at the Nasdaq record high percent index. And when it gets below that 20 reading, okay, that's part one. And then it has to cross back above this 35 reading over here. And when it does do that, if it gets below 20 and then back above 35, it is tagged some very, very important bottoms in the market. So for example, long-term capital management over here, boom, we rallied up higher. Right over here was the .com bust, right? It triggered right over here and that found the bottom there. Even 2008, it was down here and then came up and then here, right? Boom, boom, boom. I'm not going to go through them all. And now it's recently getting back above this level after being overextended. But I want to proceed this with a little bit of a warning here too, because this is very similar to how 2008 looked, right? Where we came down, we moved up, we came down, and then we moved back up to 35. We went down, we came up, we went down, we came back up to around that 35. And as you can see here, boom. Okay, we saw the big move down, we saw bear market rally, and then when this started coming back down, then we started seeing some aggressive selling behavior. So bullish so far, and we're seeing, the 5-day moving average hold up on the very short term. So things are looking good overall as it stands currently. But, like I showed on the NVIDIA chart, it takes a very, very, one bad thing to happen and all those gains can be wiped in just, boom, a snap of the fingers. If we take a look at the dollar really quick, this will be the last chart of the day. Still in that bull flag format, and it's still kind of holding up right here. If this starts breaking out, to the upside, I think that's going to be putting pressure on the S&P 500. If it does start breaking down, that could very well propel us to the upside. All right, everybody, that's all I got for you on today's episode. Just so you know, the bulls are still in control on the short term. We're seeing some decent developments there on those indicators, but just be mindful that, hey, it only takes one day to change very, very quickly a narrative, okay? So be careful out there, and I'll see you back here tomorrow.